Howdy everyone, this is Koriffic Corp, and we are going to start talking about May 10th, which is today and the week ahead. Right now what I'm seeing is a lot of different opinions that are being circulated on X as well as across different people that I am speaking to, different traders. So it's kind of an interesting situation because there's a historic extension right now on the SOXX and NASDAQ and all of the different tech indices. So a lot of people are naturally thinking it's like, okay, what goes up needs to come down. Of course, you know the expression when we go in the other way around, do not try to catch the falling knife. When we're going upwards, do not try to short the market that is booming. Essentially what that narrows down to is follow the trends and follow the flows of the money as you are moving through this type of environment. What is been quite interesting for me actually is a few things that have been posted recently. The extension is quite high. If you are looking at the pivot points for QQQ as an example, where essentially last week we just exceeded the R3 pivot, which is very rare, very unlikely event. Doesn't usually happen, but at the same time, you do have to remember that there has been catalyst that is driving a lot of the markets. If there was no catalyst and we're just going like crazy, then at that point you need to start wondering. It's like, okay, what's going on under the hood? Is that a trap? But if we do have a catalyst, and I do think that there is something that is brewing with the Iran and US situation that is acting as a positive catalyst for the market. So all of the signaling that we are seeing from Iran and the US right now is that the deal is going to be made. Everything's been quiet this weekend. There are some responses that are coming through, and it all signals to the markets that the war is going to be over. So that is the narrative that I am following at the moment. And if you're looking at these candles right here, this is institutional buying. This is not just retail jumping in and out, right? This is a systematic, consistent flow of the money that is going into the market. So what that ultimately means is that the market might be already positioning for the end of the war. And if you remember the war narrative that I have developed some time ago with collaboration with a few of my mentors, I'm just going to go and snap it and put it on the screen for y'all. Where we are right now is waiting for this deal point. So deal framework finalized, both sides claim victory, and we know that Trump is going to go and say all I do is win, and Iran is also going to be, yes, we are the winners. And finally there's going to be a historic win. What happens at that point? All of that money that sits on the sidelines is just going to go into the market, right? Because they don't want to miss out on this opportunity. So markets are going to surge. There's going to be a gap up. We're looking at risk assets going absolutely ballistic. This is going to be the final melt up. I think retail now is going to be chasing all of the opportunities, and they have been chasing, right? Because they were late. When we were talking about when they started showing the signals in here and the market turned around, retail was like waiting, and they started getting in only right here at the top. So they missed half of this move already, and a lot of people are still missing some of the move because they're scared to put their money behind the trend that is unfolding right now. For institutional money, they're positioning in some more, and after the announcement, what they're going to start doing is basically taking profits and harvesting the gains, because it's very easy to go and sell into retail as retail essentially is trying to chase. So all in all, the narrative seems to be playing out, but naturally, of course, we're waiting for this final announcement. And I've been talking to a few people, and they also have this this sense, like when you see the flows in the market going like this, it's usually signal that somebody knows something, and somebody always knows something in the markets, even though we might not know what exactly is going on. So from that perspective, what I'm looking at in here is a melt up. The melt up actually it has not been as large as the melt up last year. Last year from the bottom to the top we went about 54-58%. This time around we're just sitting on 27%. So there's still room to go a little bit higher. But that being said, we are extended. So what we're looking at is rotations. Another piece that I wanted to also show you today is, if you remember that Trump seasonality that I've been watching since the beginning of the year and charting. Let me get the QQQ one. We do seem to follow it quite nicely. Again, get this information right here into the board. I guess we call it the board now. Anyway, so what we do have in here, gray line, is a previous term of Trump administration in 2017. In here we have the orange, and that is the orange man's current term. We did have a little bit of pullback and we're continuation higher. We seem to be repeating essentially the pattern of this blue line, which is the last year. But if we do stick to the mid-year, then we do have a little bit of space for the melt up and then the continuation into the lows, or perhaps the last year's opening price, give or take, or this year's opening price, give or take, or closing price. Doesn't matter how you want to think about it, but I do think that there probably is going to be a little bit of that pullback when it comes to the financials in particular, and that is going to pull everything else back as well. So let's go through the macro narrative initially. So right now SOXX is essentially running the entire show. You can see how crazy extended it is. XLK is picking up as well. So this is technology, but and IWM naturally is going to be another one of those sectors that is going to follow. By the way, this was on my watch list last week, and if you did take it, and that was a very, very easy trade that played out quite nicely. So I'm going to remove all of the markings in here, but nevertheless, it definitely showed a very nice view in here. Bitcoin is starting to pick up as well, especially if we're looking at the daily. What happened in here, we broke this finally this trend line quite confidently, and now we are essentially looking at higher prices and we're in the uptrend. What we do have above us is 200T on the daily time frame. So what I'm expecting right now from the path perspective, we're probably going to go and hit it, then come back, retest the trend line, and then go for this 87 area, where there is a huge concentration of orders just sitting in there. So that would be my most likely scenario for Bitcoin. HSI also is signaling the change in the trend for us as well. We're essentially looking at somewhat of a head and shoulders pattern. It's a little bit crooked, but nevertheless, you can also call it the cup and handle. And that signals to us all of the events that are going to be happening very much imminently when Trump is visiting China over the next week. So to me, what that is signaling is that there is some positioning that's coming in. We have 20T about to cross 50T. We are sitting above this most traded area. So from that perspective, the path of least resistance is going to be higher on China. And this does look like a nice 50 MA box. So naturally, of course, we need to make sure that we get through it from the HSI perspective. And then we go for all of these wicks right here, which is going to be absolutely beautiful from the Chinese market's perspective. The bonds are interesting to watch, and here we also do have a little bit of consolidation. Again, warning signs. That's what it signals to me, as bonds are going to be spiking to this 4.5 area. This is usually where the administration starts doing something to drive the action down. But right now, this looks like a bullish pattern for the bonds for me, which is concerning. From the oil standpoint, we do have a little bit of that double top, but oil still has not given up. The price continues to be above the 20T and above the 50T. So technically in somewhat of an uptrend, but more consolidation more so than anything. That being said, if you're looking at the monthly, say for USO, which is the oil ETF, we essentially hit the 50T, and right now it would be a natural point for us to go down a little bit more. And that is going to be facilitated by the good news from Iran. Finally, one of the additional things that I've been watching is the high yield index options adjusted spreads from Bank of America. I was going to say BMO because I'm in Canada, but it's Bank of America. But what we do see is that we're getting to this very low rating in here, and every single time we get to these low ratings, we actually get pretty massive and aggressive spike. This was the 2007-2008 crash, essentially. When we see the spikes, we essentially are looking at the crashes, and right now we're at the historic low levels as well, which signals to us that there is possibility. So those signs are showing, and I'm not saying there's going to be like a huge crash, right? We can have like something like this happen that is, not a huge crash, but still is a significant pullback that we're looking at in comparison to like these minor things that have been happening over the last little while. So this was April 2025 tariff tantrum. This was this year's forward runs. You see how small they are in comparison to the pandemic ones, or say the 2008 crisis. The dot-com crash also has happened over actually quite a bit of time, right? You can see how it's the spreads remains pretty elevated in here. But once we're getting to these levels, I want to start thinking about being a little bit more cautious. XLF is finally what another thing that I'm watching right now. This kind of looks like a Wyckoff distribution to me, where the financials have not been moving very strongly. We did make a new high, move down, and we've been struggling to make an advance. You can see a lot of concentration is below. So that is all to say that I'm not trying to pull a Michael Burry. I actually think that he got into his shorts a little bit too early and sacrificed some of that premium. But that being said, he is positioning for something of the more larger proportion. Same with Warren Buffett, and also same with myself. So I'm not positioning to short the market right now, but what I'm positioning in right now, participate in the bubble and make money while the bubble is inflating, but also be ready to get out of the way when it actually pops. So all of that is to say that you need to be thinking risk management, and you cannot go and be, hey, I'm going to go full on bull mode, or I'm going to go full on bear mode, because you're going to get slaughtered. What you need to do is have some sort of idea around what might happen, what are the potential paths. Keep your eyes open and have multiples of options, and make sure that you know how you're going to be hedging your risk. So that is my number one advice for this particular scenario. So other than that, what we're looking at as well is flows into gold and silver. So this is a very bullish structure to me for gold, for silver, for gold as well, held quite nicely. But out of all of the metals right now, where's my HG? Copper is just absolutely beautiful setup. This is a head and shoulders breakout from the box. You name it, whatever way you want to look at it, we are essentially looking at the continuation of this initial breakout that happened in October 2025. So copper is ready to go. COPX is the ETF that I'm holding right now. That is going to, that looks very, very good and very strong from the macro perspective. And naturally, that is going to provide us with some interesting opportunity on copper itself. Another one that's interesting to me is TAN. You already know, if you follow me in my Discord, that I am already in this position right here. On the weekly time frame, nice breakout. We have a target in here. If we're using the extension target, we're probably going to get to around 74. That's about 24% move. Very nice move. We are about to create a golden cross right here between 20 and 200 T on the weekly time frame, and the 50 T is catching up very rapidly. So this is a very, very nice play. I have a high conviction setup in here, and my stop loss is right below this. Quite highly traded area. You can see how aggressively this 20T is churning around. So that is another positive sign for TAN. So those are the sectors I'm looking at. XLE not still looking the most amazing. A lot of it is conditional on the Iran war, but even after Iran war is settled, there's a good possibility that oil is going to be involved as a part of the deal, and that oil is naturally going to go to all of those companies within the XLE sector. You have to separate the oil price, the USOs of the world, from XLE, which is all of the processing and infrastructure around oil, which can benefit actually from reopening of the Strait of Hormuz in many ways as well. So what I'm setting in here, my stop loss is going to be this wick right here, the low of the box, and what we're looking at is continuation for now. Okay, so I talked about IWM. Dollar index kind of in the consolidation stage in here, double bottom right now on the weekly time frame. Again, we're just consolidating in this box right here. There's a lot of liquidity above, so I wouldn't be surprised that the dollar is actually going to become stronger at some point, but we just have to wait and see what happens as the time progresses. From the seasonality perspective, dollar is supposed to start picking up upwards once again. And I think if we're looking at this trend line, we essentially are just sitting at the lower trend line in here. I think I've been talking so much that my voice is getting like a little bit raspy. So we came down, and guess what? We're probably going to go and accelerate on the dollar once again once we're able to recapture the 20T altogether. So that's the story. I'm remaining bullish right now on NASDAQ. I'm remaining bullish on S&P. Like melt up can continue going. There could be like some smaller pullbacks, but all in all, I think we are witnessing a very bullish story. For the individual names, I did have the Nokia entry in here, doing quite well. TAN is another one of the names. PPLT, Platinum, is another opportunity from the metals perspective. Breakout from the trend line. We have IGV, which is nicely finally starting to move. If you know how long I've been waiting for this shit to move and how much I'm being like, oh my god, can you just move? Like, this is it. It's actually been a few weeks, and now we're finally poised for a continuation here. Money is flowing into IGV, into software sector, just as we expected. XLE, already talked about it. AAOI, did not love the earnings reaction, but it did maintain the weekly trauma right here. Left quite a bit of wicks. So I'm somewhat happy with it, but it's not, especially excited. So we'll watch how this all develops. Gold looks good. TLT, KIE, that's short on the financials because they kind of suck right now. That's what I'm thinking about. Iran has been running quite nicely, and then NBIS, this is one of the things my brother actually took, and this was his first trade, so he's going to be following the 20T in here, and so we're expecting a move of about 79%, which is quite nice. Some names that I'm loving right now: Applied, been in it already for quite a bit of time. I reestablished the trade idea, but I'm already 50% up on this particular trade. But essentially, weekly time frame, you have a box and you have a uptrend right now. Can go absolutely ballistic, looks great. COPX, copper ETF on the daily chart. We have this cluster of traumas, and whenever you see something like that, the move is usually going to be explosive, so I'm very bullish in here. I actually am thinking I might add a little bit of copper into my position right as soon as possible on Monday and allow it to go absolutely ballistic. Silver, good position. Lunar is another name that has broken out on a weekly time frames, cup and handle. So in here, if you're in the trades, just follow the trend and let it run. RDW is good cluster in here, breaking out from the trend line, very strong, can go ballistic very quickly. And right now we are sort of looking at this breakout spot right here, confirmation already. In here, would love for 20T to start curving up as well, but this one is looking pretty damn good from my perspective. Palantir still hasn't rolled over, even with all of the Michael Burry talk. That being said, there is liquidity above and below, and we need to see how this unravels. I am still bullish on Palantir, and watching that shield does not, it kind of looks like crap. I'm probably going to get rid of it. Oklo has been creating this base in here. We have open windows. To me, that looks like a continuation up once we are able to capture the 200T. Currently, we do have all of the traumas starting to curve upwards, and I would imagine that there's some liquidity sitting up here. So yeah, there's a good possibility that Oklo is going to be one of the play, and that is going to drive URA upwards. URA long-term position for me. We are seeing this box, not loving this potential cross in here, but that's what we're watching, and Oklo can naturally drive this thing upwards. NRG was another one of those plays that I've been in for a while. It seems to be unraveling downwards, and this looks pretty bearish to me. So at this point, I might be closing the position altogether. We do have a little bit of liquidity in here, so possibility it's going to come down, grab that liquidity, and then continue going higher. But it closed below the 50T on the monthly time frame, which is not what I want to be seeing. So I'm going to get out of this. Roku, it's been interesting because we broke out from this trend line, and ever since this thing's just been wanting to pump. And I'm already 15% on the daily on this one, so I'm just trailing it very closely because last time around this thing just like died on me, and I did not like that very much. Uber trying to do something, but still is within consolidation. So some new names, new ideas for you all to explore. Number one is Apple, and number one is just a stylistic term because it just happens to be number one on the list in here. We do have consolidation, some good news on Apple, weekly time frame, clear breakout. We have break of structure once again, but we do have a trend line at the upper end in here. So if we do see a little bit of pullback to the trend line, this would be an ideal entry spot that I'm hoping for, but naturally it can just go all the way to about 304, 300 type of area, and then that is going to be one of the places where the entry is already going to be too late. Right now the entry is too late, so that's why I'm looking for a pullback in here and then continuation for the upper end of the trend line. So Apple looks good. But you need to know how to play it. NVIDIA looks excellent. All of the other semis have been running. NVIDIA has been stuck in this range for pretty much a year. Last time it did that, you can see how ballistic this move was. So right now might be a good entry if it does retrace a little bit and provide that opportunity at around 210 or so, and then we go for 262 plus. Your stop loss is going to be 20T as we're moving upwards. Snap came onto my radar as well. Daily time frame, nice chart. We have a nice turnaround in here from the head and shoulders pattern. This is a flag from the earnings. A reaction was negative, but you can see how quickly it's recovered. And right now what I'm looking at is the pass over this box entry line, and that is coinciding also with recapture of 20T on the weekly time frame, in which case we probably are going to go all the way to 818, which is might be a nice spot to enter in. UNP, also Union Pacific, we are looking at monthly time frame, very long-term consolidation, and in here this is a first opportunity for us to enter. We have a little bit of the flag. If you trade the cup and handle, this is a classic cup and handle for continuation. And right now what we're looking at in here is the cross over the trend line, and that is going to give us an 11.059% move. So close above the trend line, close above the trend line. You have to remember, for every type of setup that I'm talking about, what we're looking at is either we have a close confirmation or we have a retest confirmation. So that is what we want to be playing. Finally, Mara. A lot of people are very excited about Mara, but there's a 200T on the daily time frame, and what is going to happen is going to go there, it's going to hit it, and then it's going to go and get rejected, come back to 20T, and then go ballistic for 30% move all the way to this area of 1601. So that is my expectation, and that is how I'm going to be playing Mara if I do enter into this position. Right now, my favorites are Apple, NVIDIA, and Mara. The other two are just here as additional opportunities out there if you wanted to play it. Other than that, stay safe, manage your risks, say Happy Mother's Day to your moms, and other than that, Koriffic out.